Hi everyone, and thank you for tuning in to this week's Market Outlook. In this video, we're going to be discussing a key idea for trading over the course of the next few days, the rationale behind it, and some of the things that traders should be aware of if they were to take that trade. Joining us is Stanislav Bernichov. Thank you very much, Stan, for being here with us.
Thank you, Michael.
So what then, Stan, is the idea for trading this week? What instrument are you looking at?
I'm looking forward to the potential decline of NASDAQ or continuation of this decline. We see that it had erased all earnings which it had produced during August, and there were heavy distribution days yesterday and at the end of the previous week. So probably sentiment is changing back towards hawkish scenario for Fed, and we see that tech stocks are kind of fragile, so they're not holding well, even though they had some good performance for Apple, for Google, for Facebook, so still they cannot hold. And I see the potential support zone below, maybe at the 12,250 level, or maybe at a similar level.
And apart from the performance of individual shares within the index, what do you think, Stan, are the key narratives that's going to be driving this possible move downward by the NASDAQ?
So first of all, it's the rise of treasury yields for 30-year bonds again. So we see that they have had the bottom in the beginning of August. Now they're moving up. So this is a pretty consistent trend, which is going on throughout the last 2 weeks. And of course, American dollar index is peaking. So we had the new peak basically yesterday and today, so that gives the idea that probably the hawkish scenario is getting back, and we see that probability of 3-step hike in September is getting back to 50%. So investors don't really know what to discount. I mean, what scenario will be in play, 2-step hike or 3-step hike, and they are getting nervous and try to sell their positions in tech stocks just in case, because markets don't like uncertainty. Also, in the calendar, we don't have any big news other than Jackson Hole symposium at the end of the week and the speech of head of Fed, Jerome Powell, which will be at 10 a.m. American time. So that might bring some volatility to the markets because he is one of the main persons who brings volatility to the market. So traders, investors will carefully listen to what he says because, as I've said, this is an intrigue. We don't know what scenario will be in play, 3-step hike or 2-step hike.
So in summary then, the possible trade for this week is a sell for the NASDAQ or US tick that's going to be driven firstly by individual shares possibly going down within the index. And the key narratives that are driving that movement are, of course, the rise in the yields from benchmark American bonds and the rising probability recently of the hawkish scenario for the Fed for a 3-step hike, around 50%. And over the next few days in this week, traders are looking most closely at Jerome Powell's comments at the symposium in Jackson Hole on Friday afternoon GMT. Thanks very much, Stan, for being here and for giving us your idea and the reasoning behind it.
Thank you, Michael. Have a good trading week, everyone.